Commodities are moving in different directions this week. Energy names are shifting, metals are flashing mixed signals, and softs are showing bursts of strength. Here's a quick pulse on the major moves before the critical monthly closure next week. And today we start our discussion with natural gas. As we can see on the candle map here, natural gas closed the week, the day, and the 10-day frame with strong bearish continuation candles. And to make it worse, we can see that it is about to flip the 100 over 200 days moving average in a bearish cross, and this is probably going to happen on Monday. So far we are not seeing any reversal signs, and natural gas has better chances, much higher chances to move lower. This is the midterm chart that we shared way back in July, about exactly a month ago, and since then natural gas is continues its move lower, and there are a couple of technical targets that we are expecting it to hit right now. Well, a week ago we shared a long-term perspective where we evaluated the bigger picture and the perspectives for natural gas for the next couple of quarters, maybe a couple of years. Well, if you're interested, you can check on our website investingangles.com. Well, now let's move on to oil. So oil has quite a different picture compared to natural gas. What we are seeing here is that oil is trying to form a bottom here, although the daily sequence is not very strong, and it could be even an advanced block if we see a strong bearish move next Monday. However, we are considering it as mild bullish, moderate bullish. So 3-day frame closed with a strong inside up candle, and also the weekly formed a bullish engulfing. Well, this is at least a few days next week. We are expecting oil to continue gain. And if we look at the bigger frames, for example, the monthly, it's not looking very promising at this moment. However, everything could change if bulls continue on the momentum next week. This candle can transform into something bullish or at least something neutral. If we look at the Elliott waves, so at this point I'm seeing mostly the bearish formation, and one of the reasons is that the wave upward so far has been corrective, and that's why I have a few bearish counts here. So one of the bigger ones is an ABC formation. We might have a fairly strong wave C here, which could be either an impulse or a diagonal, or if we have a strong reversal here, then the blue path will become the primary. So far, this is a big question, and we are waiting for the monthly to close. I think that the monthly candle and the next weekly candle will tell us much more than right now. Now, if we look at the oil major corporations like Exxon, Chevron, Conoco, Phillips, what we are seeing here is very strong bullish moves here. And for Exxon, for example, we have a freshly made 50 over 200 days moving average golden cross, and it's quite rare event, and the same happened 2 days ago for Chevron. In this case, we are looking for at least a mid, maybe long-term bullish perspective, and if we look at the weekly frames, for example, we have a very strong bullish engulfing, breaking above multiple resistance lines. I think that somewhat similar is happening with Chevron. ConocoPhillips is moderate, but still it is leaning bullish at this point, and if it breaks above this green line, which is on the weekly frame, which the range for this large green candle, we would be looking for a bullish path, and now see the proximity of the price to 50 weeks moving average. Well, that's bullish perspective for the oil majors, and now let's talk about the next energy item is uranium. What we are seeing is a very strong move on Friday, and technically it formed a tower bottom here, and now we have very strong bullish odds on the daily frame. The weekly was stick saved just on Wednesday. It was looking like it is going to be falling three methods, but right now we are having most likely a reversal hammer, and if the next week is solid green, then we are looking for a big move upward. If we look at the Elliott wave, so this is the chart how we left it on August 16th. Today is August 23rd. So what I'm seeing here, I think that it can be viewed as wave end of wave C here. For the wave 2, it hit 36 exactly as we expected, and now we can be looking for a bigger wave 3. So the red count here is becoming primary. I think that we can remove at least this one, the purple one here, and I would be looking for wave 3 somewhere here. Well, that's the perspective. This is the short term, and if we look at the midterm perspective, this is the chart that we discussed way back in May. Way back in May, when URA, Global Uranium ETF, was just 27. And since then, it made about 55% so far, and I am looking for this particular wave. I think that it is going to be something like this. So we had wave 1, this could be wave 2, and now we would be looking for wave 3 somewhere here. However, considering the size of this wave, I think that wave 3 could be much higher here. Well, once we have the monthly closure, we can discuss the next steps and see how far it could go. Well, and today is August 23rd, so we hadn't looked at this for 2 weeks. Well, now let's move on to the next uranium instrument, and this is Quad U Energy Fuels. So we are seeing the same, technically the same formation as URA made. This is a strong tower bottom. We have a strong inside up on the 2-day frame. The weekly frame is flashing bullish, and the chances for the monthly to close with a bullish candle are fairly significant. Now let's have a look at the Elliott waves. This is the chart again that we made in July. So far it is working very well, and I think that this wave here was indeed wave 3, and this was wave 4. So we would be looking for wave 5 somewhere here, and this would be the red one, and this would be the one, wave one in red. And I think that the most typical target for this wave would be somewhere somewhere here. So this would be the most typical based on some Fibonacci levels. Well, and now let's put these targets here. So it's approximately this 12.81 to 11.27, so 11.2725. Yeah, that's my target for wave 5 and wave 1. Although we should remember that for uranium and for other commodities, wave 5 is often the longest wave in the sequence. So if we have 1, 2, 3 here, 4, so the wave 5 could stretch much higher. Well, this is something that we can keep in mind. But so far, the odds look bullish. Well, and just a week ago, we discussed energy fuels from the perspective of very long view, and there was a special study posted on our website investingangles.com. If you're interested, this is available for members only. So that's all about energy, and now let's talk about precious metals, and we start with gold. An interesting formation for gold. Just 2 days ago, gold formed a very strong bearish engulfing on the 10-day frame, and we had a special discussion about it. And the previous week was closed with a bearish engulfing also, and technically the 10-day is just an escalation of the weekly bearish odds. But on the daily frame, gold formed a very strong bullish engulfing one, then a pause and another one. So we are looking for possible extension, possible rally a little higher, and the weekly candle is technically a piercing line, which is a bullish, moderate bullish formation. If we see a confirmation, that could be a big deal. But the question is what we're gonna do with this 10-day bearish candle, and I would like to say that the bearish momentum continues to build on the long and midterm frame. Now let's have a look at Elliott waves. So what the hypothesis that I discussed a while ago is that gold is forming some sort of a triangle. It could be a 5-wave triangle or a 9-wave triangle. Anyway, what we are seeing here is that the range is shrinking, and this is like a coiled spring. So we might see a burst here, possibly wave 5 as a completion of a triangle, and after that we would be looking for a move downward. However, the purple path also remains here, and I created the next chart specifically to discuss the short-term perspective. So this is the recent wave. It can be viewed as an impulse, technically ended with an ending diagonal. Then we can see a wave 2, and so far this wave looks impulsive. We can see the clear 1, 2, 3, 4, 5 corrective action downward, and possibly a strong impulse up. So if it breaks through this line, which is an all-time high, then I would be looking for potential impulse upward, and as I discussed here, this would be my target, an ideal target, 36.50. Well, so far this is wave 3. It could be wave 3 here, then we can see a pullback for wave 4 and another 100 points upward. However, if gold fails to break through the all-time high, that immediately makes it a much bigger corrective action, and I would be looking for wave A, potentially wave B, and possibly wave C. So this would be a huge corrective action, and with a good chance for wave C to be an extended one, based on some technical considerations that we discussed in our written report. Well, so I think that the all-time high is a critical indeed level, and if it is broken, then we would be looking for a higher high. And somewhat similar formation can be viewed on the GOD Gold Trust. So this is also a clear, fairly clean triangular structure here, A, B, C, D, E, and possibly an impulsive wave. Well, the GOD is always more difficult to forecast because of numerous gaps. We don't know what kind of waves it's beneath. So if we add this one here, so it is possible that we are right now looking at wave 3, wave 4, and wave 5. So somewhat similar to what I'm expecting here for gold. So let's see how it develops, and I'd like to emphasize one more time that the new all-time high is a very critical moment. Now let's have a look at silver. So silver is also bullish on the short term. It's reversed in the middle of the week. A strong piercing line, confirmation, and another continuation candle. The same happened for the weekly frame, and right now the weekly is also bullish, and I'm looking for a new higher high. However, if we look at the monthly frame, which is a very interesting candle, silver formed last month. If silver fails to close above the July high, it will form a bearish candle here, bearish inside candle, and even if it does go to higher high in September, it still be a bearish formation, and I would be treating it as just as a temporary move. And somewhat similar formation we have for silver on our Elliott wave chart. As you can see, there are two possible paths. So the green one is the bullish one, and the red and blue are the bearish ones. The red and blue are technically synchronous right now, but the difference between them would be that the blue would stop somewhere here and the red would move much lower for wave 3. So again, if silver makes a new higher high here, it would be most likely a green path, and I would be looking for at least one more impulse upward, and it might be a very significant one considering the size of the starting wave 1. So I think that we might go into 42, 40, 45, even 45. Yes, that would be the perspective. Well, but let's take it step by step. The next critical level is the new high. Well, that's all for silver. That's all for gold. Now let's talk about some softs, and we will start with coffee. Coffee is running bullish, and so far I'm not seeing it stopping. Well, it is overbought right now, and just 2 weeks ago we flagged this strong bullish engulfing, saying that there is a very good chance for a rally. So far, coffee added 25%, and now we are looking for a strong monthly closure with a very good chance to continue higher. Now, if we look at the chart, so this is the one that we shared in June, saying that the coffee is about to form a bottom, and it was the red line was a significant one that must not be crossed, 260.14. So coffee approached it, but reversed and formed a very strong bullish candle, which was immediately followed by a few more. And now looks like we are going to have 3 white soldiers here. So the target for this wave is somewhere between 450 and 545, with the most typical for the flag like this would be about 492. Well, that remains unchanged. We are expecting coffee to continue higher. Well, now let's talk about corn. So corn is different. Corn is different from coffee, and the reason is the coffee is very strong on the weekly frame, bullish weekly frame. Corn is not. So it is potentially forming a bottom. However, we need to see a much stronger move above the red candle and above a break at least through the 8 weeks moving average. Until then, this is neutral with a potential for lower lows. The daily so far is moderately bullish with the chances to move higher. And the monthly frame, well, it looks, if it closes like this, I would be treating it as a ladder bottom with a very good chance to reverse and move higher in the next couple of months. Well, as you can see, the monthly is critical, and we would be looking for it. At this point, all 3 potential paths remains on the table, and I think that the monthly would be indeed crucial together with the next weekly candle and a few technical signals. So that's all I wanted to talk about commodities, and now let's wrap it up. Let's summarize. Natural gas remains under pressure, steadily losing ground with no signs of reversal yet. Oil is trying to carve out a bottom, and a bullish week ahead could flip the monthly narrative. The oil majors, meanwhile, are staying firmly bullish. Uranium looks ready for its next advance and consolidating. Check our detailed UUUU energy fuels study on the site for the longer-term picture. Gold and silver offer short-term optimism but are weighted down by growing mid-term bearish momentum, with silver carrying particularly higher downside odds. Coffee is still strong, up about 25% since the bullish engulfing 2 weeks ago, and may have more to give. Corn is hinting at the bottom, but the weekly picture is unconvincing, making the upcoming monthly closure crucial. Next week, we'll broaden our lens to cover GDX, wheat, lithium, and more. Engage with us, follow us on Reddit, X, YouTube, and Telegram. Share across your circles at Investing Angles, which are the charts before the crowd even blinks. Thank you for watching.